We here at Dragon Argent, one of the things that really matters to us is that we can have interesting conversations with interesting people, and that we try and talk about as many different subjects as possible, so that they're useful to our clients and those who might, and other people. So thank you for joining us this morning. I am Jenny Jones. I'm the MD here at Dragon Argent. And this morning I'm joined by Harry. Would you like to introduce yourself?
Sure, I'm the head of accountancy at Dragon Argent. I've been here since February this year. Prior to Dragon Argent, I've worked in outsourcing departments for around 10 years.
Perfect, thank you. Harry, so you mentioned you've been with us since the start of the year. And one of the things that you've done since you've joined has been really learning about our clients and the businesses that we have and we support. What sort of challenges have you found that our businesses, our clients are facing when it comes to the outsourced finance part of their business?
Yeah, when we evaluate a company's finance function, we think of three headings. We think of people, process, and technology. So the common problem we see under people is sort of, either founder managed finance or junior members of staff running the finance. So this leads to typically either inaccurate data within Xero or just unrealistic forecasting. This then means that the founders aren't really focusing on strategic growth. They're like juggling two different jobs when they should be just focusing on the growth of the company.
So the founder finance bit is when founders are actually themselves doing all of the finance side of things.
Exactly, yes. They could be just posting things in Xero or doing payment runs, but what we find is quite easy to get bookkeeping wrong. Cloud accounting platforms like Xero are great, but it's quite easy for them to just click reconcile and it looks like you've done a good job, but you're posting to the wrong account.
Right. Okay, got it.
In terms of processes, typically what we find is that either companies are, doing reactive cash flow management rather than proactive. So this means that when they're running out of cash, they're deciding to do a cash flow forecast and then realizing, we actually don't have much runway. Instead, we should be doing that on a monthly basis and actively, looking to see how much cash we'd like to have over the next period, rather than just focusing on revenue and growth. We should always think about cash as well.
Okay, so so thinking further, so don't leave it too late.
Exactly, yeah. And the other process issue is probably not focusing on sort of GP margins as we scale, and getting to a position where we then have to report to investors and board, and then realizing that actually our GP margins haven't been consistent because of timing issues. So we haven't really accounted under the accrual principle, but actually we're just done it in cash right instead.
Okay.
Yeah. The third heading is technology, and this generally means that clients aren't really leveraging the correct tech stack, when they scale. So that can mean that we're not really making the most automation, and also for reporting purposes as well. If we're doing two separate things in terms of recording the data in Xero or QuickBooks, whatever it is, and then we've also then got forecasting or cash flow forecasting outside of that in Excel. They're two different systems. So if we actually have a tool that links Xero to our forecasting and cash flow forecasting, then we can use that data to actually apply principles to forecast that. And we know that it's using real data. Okay,
so actually then you're able to make proper decisions because you're using the data that you have in different places in the same, you're putting it together rather than keeping it separate.
Exactly. Xero's got open APIs, so there's loads of tools that link and can use your actual data to forecast out, applying principle to that actual data rather than two separate systems.
What's applied principle? What does that mean?
We should say, we're applying a certain percentage or sales and forecast in terms of revenue expectations to the actual data, and the actual margins rather than expected.
Fine. I mean, I am not an accounting or a finance person, which is where you come in. Okay, so we've talked then about what the challenges. So those are the main challenges then that we find. So it's people, process, and tech. Mm-hmm. So how do you and your team support clients with those problems?
So for people, we typically like to set ourselves up as a full finance team, outsourced rather than an outsourced sort of accounting firm. So that could mean that the client has the experience of having an outsourced bookkeeper, financial controller, and finance director on a part-time basis. We improve lines of communication so that we could have a Teams chat or Slack channel where the client basically pings messages to all three of the outsourced finance team, rather than catching up once a month or whatever that is. So they get the effect of having like a full finance team in-house at the end of a chat, basically.
Okay.
Process is we would set up a monthly finance call where we present the specific tailored management information, KPIs, forecasts, monthly basis, and tell the client what's happened historically and where we're heading based on things going forward. And it will often lead to scenario planning. So we then might change the forecast, alter it a little bit to say what happens if we employ new people, or if we buy this asset, or if we have these significant client wins come in, or what's the best and worst case scenario in the next 12 months.
Okay, so I think having worked for a small business before and having been personally in charge of all of the zero side of things, I am not being equipped really to do that. The benefits are that you have people there, you have experts on hand to help you with whatever you need, and because of that, actually you understand the data and the business really well from the bottom up, so that then when it comes to the management accounting and the reporting, actually and the insights and the commercial decisions that can be made as a result, and that can the cumulative impact of all of that is actually that the founders can be much more confident with all of the data, that they understand the data, that the data is accurate, and that they can actually make really good decisions on the back of that.
Yeah, exactly. So typically we scale our services between day-to-day bookkeeping from inception incorporation, up to advisory as businesses scale. So typically our client base is probably in the second stream, and obviously they're in like the development phase. So we navigate those sorts of companies through investment rounds. So specifically looking at cash burn and cash runway, and when they go run out of cash and when they need that investment and how much they need as well. But we also deal with scaling businesses. So one that springs to mind at the moment is a business we're dealing with that 12 months ago was pre-revenue. Now they're like at 200, 300k revenue per month. They have probably a people and a process problem at the moment, whereby the in-house finance lead is probably too experienced to give meaningful financial data, and hasn't really controlled the profit margins. This has led to sort of investor, a drop in confidence, because they presented the management accounts to them recently. Profit margins have jumped all over the place because of timing issues with revenue and expenditure. So we've gone back and sort of unpicked the last 12 months, did some accrual accounting, and now we're creating a board pack for the investors this week. There's other companies that spring to mind in terms of we have an established construction company that we recently engaged with to be their full outsourced finance function. They have an internal bookkeeper, but they definitely had a people problem because the internal bookkeeper was just managing the books, but not actually giving them any insights at all. Wasn't forecasting or any profitability in certain departments or projects. So now we're looking at it, and when we initially engaged with them, they were saying basically one of the departments they thought was loss making, and they're going to close it down. Since we've joined and we've sort of had these monthly finance meetings, we've understood that the department is profit making, and then now got plans to grow. We're currently doing the forecast for them this week to put in a few more employees and some new client wins and see where that takes them.
Okay, so there's all sorts of different impacts then that doing all of this, having this kind of dream team of finance people behind the scenes can actually have with businesses. So you've talked then about people, an impact, a people impact, process one. I know there's another client that we've got which had more of a kind of tech challenge.
Yeah, but they were forecasting outside of in Excel essentially, so outside of Xero. They created their own forecast, but since we've sort of engaged them on a monthly basis in terms of having a outsourced finance team, we've linked Fathom to their Xero account. So we use their actual data and then applying a forecast to their actual numbers. And we realised that although they had a really good 2023, they've changed operations significantly in 2024, and that's led to making some some losses in this year and some really difficult decisions they've had to make as well. They're now, getting rid of some employees, unfortunately, in their office space as well.
Yeah.
But they're quite optimistic now. They've made these changes that they can grow.
Because now they've got the confidence that they actually really understand the fundamentals of the business. I mean, where is profitable, where is not, where is working, where is not.
Yeah.
Okay. I've got two more questions. I realise that we're rattling through an extraordinary amount of information for everybody. So we will summarise it all and send it round, not least because I know my next question, the answers to this involve a lot of different apps and names and brands and tech. So we've talked a little bit about the importance of having a tech stack, so having the right thing in place now. There's huge amounts of different sides of tech that you can use in finance and accounting. What do you think is a good stack for people? What would you recommend?
I mean, there's literally thousands of apps that link to Xero, but the simple wins probably are to have your bank feeds up and running. It's very obvious, but lots of companies still don't do that. It just means that as accountants, we don't have to chase our clients for that information. We can work on the accounts throughout the month, giving real-time data rather than just once a month or quarter.
That is a feed from your bank to Xero.
Exactly, yeah.
Just join that up.
It just replicates the statement in Xero, ready for us to reconcile.
Okay.
In terms of supplier invoicing, we recommend that each company has a accounts email that auto forwards any attachments straight to a HubDoc or a receipt bank. HubDoc and receipt bank are just invoice capturing softwares that allows to automate the processing of these invoices into Xero. But they also keep the PDF invoice in Xero as well, meaning the company's compliant with HMRC, keeping records for 6 years. In terms of employee expenses, we recommend Expensify and Clio. Both of those allow the employee to have an app on their phone. They just take photos of their expenses and they tag them to whatever expense code they relate to. Meaning the employee does the legwork in terms of getting into the accounting platform.
I like that. It is easy and very straightforward to use.
Yeah, and ultimately it's in the employee's interest to do it, otherwise they don't get paid.
Yeah, good point.
Payment runs have always been a bugbear for clients and accountants. One that we strongly recommend is Apron as an app. So Apron recently have just changed the game in terms of payment runs. You can, as an accountant, select which invoices to pay. So we just select a bunch of invoices. The client gets just an email with a list of invoices that we've selected to pay. They can click on a link to see the invoices, the PDF attachment. And then Apron links directly to their bank from Xero and extracts the money and pays suppliers. So the client literally just clicks a button to make payments to their suppliers.
So beforehand, you would have to do that separately, go into the different places.
And it'd be a case of us as accountants logging into the bank after reviewing Xero, selecting what to be paid, and then the client then logging into the bank as well, and then selecting to be paid as well. But now it's as simple as just email and click.
Nice.
There's various apps for sales invoicing, but in terms of payment automation, I think we probably recommend GoCardless and Stripe.
Yeah.
Both of those can be added as payment methods to invoices sent directly from Xero, and great ways to get paid quickly and just improve your cash cycle, basically. For reporting cash flow as you scale, Float is probably quite a basic cash flow tool that founders will probably use themselves. We typically use Fathom as a cash flow tool and also a forecasting tool because it's more sophisticated and gives greater detail in terms of KPIs and forecasting.
It's like Fathom, I think, is particularly for me, I'm not a finance person, but understanding the finances and the ins and outs of our business is obviously incredibly important and part of my role. I love Fathom because it is very visual. So it's much, stick a spreadsheet in front of me and I can work my way around it, of course, but that is a really great tool that has helped me understand which bits to pay attention to, which bits to draw my focus rather than just looking for the rag stated, original formatted bits on a big Excel spreadsheet.
Exactly. It's changed the game in terms of just sending Excel dumps from Xero accounting software to clients, whereby we make it more digestible and have lots of graphs and colour on a page rather than just lots of figures.
I like that. They're both is good. So before we open up to see if anybody has any questions, I've got one last question. So you mentioned, Harry, that before you joined us here, you've done outsourced finance, FD work for now about 10 years. So all for SME size businesses. If you were to give 3 tips to either the founder of those businesses or perhaps the finance lead in those businesses, what would those tips be?
Number one would be just get things off your plate as much as possible in terms of outsourcing or automation. Either way, just try not to delve too much into the detail, and just focus on growth rather than the transactional stuff. Actively seek sort of challenging feedback. So don't just rely on your optimistic forecasting and goals. Go out and seek challenging advice. Make sure that what you're saying is realistic. The third one would probably be just to recognise your limits. You're probably not an expert at everything, and just rely on expert advice externally.
So that's the whole thing of you don't know what you don't know. Bit. Okay, thank you very much, Harry. That was a whistle-stop tour through lots of different parts of this outsourced finance role. Does anybody have any questions? I can see there's a couple already. Let's just have a look. We've got Michael first. So when starting out, would it be advisable to also study AAT bookkeeping level 2 while also learning to maintain QuickBooks as a limited company?
I started AAT. It's a really good qualification, so I would recommend it if you're like a in-house finance lead at a company. I think it's a great qualification before ACCA.
Okay, perfect. Thank you, Matthew. Yes, absolutely. We'll follow up in an email. We've got all the notes from all the points that we've talked through, so that will include all of the names of all of these apps. The particular ones I think we've talked about are Apron. Apron is the payment run one.
Yes.
Fathom is for the reporting.
Go Cardless for payment collection.
And Go Cardless. Those would be the kind of top 3, but we will follow up with all of that. Amara, last question we've got so far is, when should a founder of a startup consider engaging an accountant? Is it best to do it as soon as possible or wait till the first anniversary of the company?
It's a good question. I think straight away pretty much, because you don't want to think of finance as just like a necessary evil. Getting good financial control straight away is like necessary, I think. So as you scale, you've got the foundations of a good financial background, rather than trying to unpick mistakes. If you're just doing it once a year or just for VAT quarters and stuff, you don't want to just focus on compliance. You want to focus on getting good management information out there as soon as possible.
And I think the one of the examples that you gave of one of the clients we have is quite pertinent to this, because that's an example of where actually they haven't done this. It's a bit of a false economy I think we sometimes see with clients, where they hire a very junior bookkeeper who then actually, as you talked about before, meant that wasn't doing as good a job as perhaps they needed. So then actually we've had to go in at obviously the client's expense and unpick a lot of work, which is not great for the client, who ends up obviously having to pay for that.
Exactly.
So yes, as soon as possible. Let's see, is there any other? we've got Matthew. Name of the speaker. So this is Harry. So Harry is our head of accountancy here at Dragon Argent, and I am Jenny, the MD here at Dragon Argent. Right, I think let's just see any last questions, or we'll just follow up with all of the data, with all of the details rather afterwards. Please let us know if obviously webinars like this, particularly when they're short and speedy, are one way of sharing lots of useful information with people, but we're really happy to talk in more depth with people individually, because we hear of, we've got so many different clients in different industries, and everybody has, as much, Harry, you've talked about the fact that the main types of challenges we do see consistently are related to people, process, and tech. And we hope we've given you a bit of useful information around answering that. But face-to-face chats to understand your individual businesses will always be much better. So Harry's very happy to have a chat. No point talking to me about that, so I would be no use at all. Thank you very much, everybody, and we look forward to, well, hopefully let us know if we can do anything else to help, and hope the rest of your days go well.